Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Eid Mubarak to all of you. In today's video I'm going to talk about 5 different companies, but before we do that I want to say the last few weeks I haven't posted a lot because obviously I haven't been well, and obviously it's the last 10 days of Ramadan. But so I just wanted to focus on doing ibadah rather than just posting the videos. But alhamdulillah, inshallah, now going forward I've got a little bit of time off work, as well as obviously Ramadan now is over. Inshallah, I will be posting more regularly, maybe 2 videos a week, if not more, inshallah. That's the plan. Let me know if you have any questions as usual, if there are any stocks and things like that you would like me to look at. Also, I'm more than happy to look at them, so I will be doing a lot more inshallah in the next couple of days. Just generally to give you an overview, I mean, we talked about this at the beginning of this week. There's a lot of companies that have already reported their earnings. The ones that we own in this portfolio is things like companies like J&J has reported. For whatever reason, instead of the stock going up, because their earnings were not bad at all. Okay, in fact, it was better than expected. It actually went down, and that's normal. Remember, these markets basically, it takes sometimes one person to feel like, oh, maybe they don't know where the company is heading, or maybe there's something the CEO said or whatever. I haven't really listened to the call yet. Inshallah, I will be doing that very soon. But yeah, so it takes one of those things to kind of send the stock down. ASML is also reported, and it was down quite a bit. So again, I think they beat, but the guidelines maybe were lower than expected. Again, I haven't listened to the call, so inshallah I will be doing that. Union Pacific was up yesterday and they reported, so I'm assuming it was okay. So I haven't looked at it again, but inshallah I'll be doing that as well in the next couple of days. And then finally, Procter & Gamble is reporting before the open this morning, so we will see inshallah what basically comes out of that one. But yeah, generally, this like we have always said, the earnings reports, the quarterly earnings, do not actually mean a lot to us. It might just give us an opportunity to add to the stocks that we own. Okay, companies like ASML, if you were down maybe, or if you're down a little bit and it hits your target or whatever, because it went down 3%, 4% or whatever it was, right? Then it gives you a chance to buy more of it. Okay, that's how I look at it. That I don't look at it such a way that, oh, it's down, why is it, you know what I mean? I don't really care. I mean, what happens is you basically worry about the long-term perspective of the business rather than just what's happening right now. Right, so let's get back to the video. I'm going to go over 5 different companies, and each one of these companies seem undervalued at the moment apart from one, and all of them have increased their dividends in the last basically almost the 5%, or if not more, in the latest one. And obviously the 5 years is also good, as well as having an excellent free cash flow. So I'm going to go all these 5 companies. I've got other videos that I've also set up inshallah in the next couple of days. So these companies are very interesting because they do have the free cash flow, they have the dividend increases that they've done recently, and some of them we have never actually spoken, or maybe we have spoken but not spoken about them for a very, very long time. So the first company is Analog Devices. This is one of the companies that we have not spoken about for a very, very long time. But the company provides data converter products. Okay, so they take analog data to convert it to digital, and then basically from digital to analog back. Okay, and they also have things like power management, reference products for power conversions, driver monitoring, sequencing, basically things like the energy management applications in an automotive, communication, industrials. So they have loads of different products that go into different industries, if you like. The market cap is $95 billion. It has a wide economic moat. Price right now is $186 per share. Dividend yield of 1.82, which is actually decent. And the latest increase was 13%, and the 5-year growth rate 11%. And this is one of the reasons we need to look at this company. And also, when you look at the 5-year, the free cash flow of $4.26 billion is actually quite good. The payout ratio is only 30%, and the dividend streak is 19 years. So they are becoming, in the next basically 6 years, they will become a dividend aristocrat. The annual payout is $3.44, and safety of 63%. Normally what we're looking for is 61 or more, okay, in terms of safety. And this information comes from Simply Safe Dividend website. Profit margins and return on equity is actually decent. Free cash flow we've already seen, $4.26 billion. Total return in the last 10 years, you're looking at about 17%. Next year is about 10% in terms of growth, and then 9% after that. It looks like it's about 3% discounted right now, $196 per share. This is one of those companies, like if you really genuinely looking for a company that is different to the companies that you already have in your portfolio and so on, especially into technology, this is probably an interesting one to look at, because the fact that the earnings are actually growing nicely, they have an excellent free cash flow, they are increasing that dividend, and the payout ratio is quite low. It's just actually interesting business. So it's one definitely to watch. The next one we're looking at Moody's. We've talked about this company a lot because I do own the other company, and S&P Global, that's a competitor. And this company currently has a market cap of $56 billion. It has a wide economic mode, and price is $302 right now, and the dividend yield is just above 1%. The latest increase, however, was 10%, and the 5-year growth rate of 13%. The payout ratio is 33% right now, which is actually quite low, and the dividend streak of 13 years. Annual payout is $3.08. Safety is 83%, and profit margin of 25%. Return on equity almost at 50%, which is really good. $1.19 billion of free cash flow. Total return in the last 10 years, you're looking at almost 20%. And then next year, they expect the earnings to grow about 20%, and then a little bit of decline afterwards for whatever reason. 3% discounted right now, $315 per share is where the price should be. Obviously, S&P Global has to be on the same list as the Moody's. Again, $113 billion market cap, so it's almost double the business of Moody's, and it has wide economic moat, $352 per share. Again, dividend is almost exactly the same. The latest increase was only 6%. Okay, the 5-year growth rate is obviously 15%, which is actually quite nice, and the payout ratio is 30%. And one more year, and this company will become a dividend king. Dividend kings are companies that have increased their dividend 50 years in a row, and aristocrats are companies that have increased 25 years or more. Annual payout is $3.60, and safety is 99%, which is really good. Profit margin, we're looking about 29%. Okay, return on equity about 16%, and free cash flow $2.51 billion in the bank right now that they can use for a lot of things, like pay you the dividends, pay off any debt that company has, acquire other businesses to grow the business, they can buy back their own shares. There's a lot of money, a lot of things they could do with that money basically. Total return in the last 10 years, we're looking at about 22%. Next year, they expected the earnings to grow about 15%, and then 13% growth after that for every single year annually. So it's very interesting how these two companies are very, very similar, but one is actually growing 13% every year after that. The other one is expected to business to decline. They must have a segment of their business where a lot of their revenue comes from that may be in decline or so on. So that will be interesting to dig deeper if you were really interested in the business. And the 5% right now, it looks like it's 5% discount. $370 per share is basically where it should be. Right now is 352. So I am adding here and there wherever I get chances, so because I do love that business. And it's a great company. The next one is the Tractor Supply. This company is the retailer for basically the farmers, and they basically sell all sorts of products, from trucks, towing, hardware, tool products, like heating products, lawn and garden and items. They sell almost everything these farmers need in order to be able to sustain their business. Obviously, basically right now is $26 billion. Let's call it $27 billion market cap. It has wide economic moat, and $249 is where the price is right now. Dividend yield of 1.67, so it's not bad at all. And the latest increase was 12%, and the 5-year growth rate of 29%. This is basically very similar to, or closer to actually, Broadcom. The only other company that I know of that's growing the last 5 years about 29% or 30%, whatever it is Broadcom. Payout ratio is only 38%, so they still have room to basically increase that. And the dividend streaks of basically 12 years in a row. $4.12 is the annual payout. 68%, sorry, of safety wise. Profit margin, we're looking at 7.66, and return on equity 53%. Now, in terms of free cash flow, we're looking at it in the billions, because it is a very small business if you think about it. Okay, 27 billion market cap, and it has about over 500 million to use for the dividends and so on. Total return in the last 10 years, we're looking at about 17%, and the next year they expected the earnings to grow 10% and then 10% annually after that. Apparently 17% in premium right now, $210 per share is where it should be, so it needs to come down maybe about $40 in order to even become a fairly valued company. This is again another interesting company that you probably will not normally consider, but the fact that they are actually the company of choice when it comes to these farmers in the US especially, right? It's basically kind of monopolize that market, if you like. So it's very interesting. It's very interesting business. I would have loved if it was slightly higher, but again, look at the relative to the market cap is actually not that bad at all. And the final company we're going to talk about is KLA Corporation. This is one of the semiconductor equipment companies. $51 billion market cap. It has wide economic mode. $375 per share is where the prices are right now. Dividend yield of 1.44, which is not bad at all. Latest increase was 24% and 14% increase in the last 5 years. The payout ratio is 19%, which is very low, and 12 years of increase in that dividend, and you will get $5.20 for every share of this business that you own right now. 71% safety wise, profit margin 33%, return on equity 106%, and almost $3 billion of free cash flow here. Total return 22%, almost to 23% in the last 10 years. Now, next year, they're expecting the earnings to decline, obviously, because with the rest of the semiconductor companies. But then after that, 5 years, next 5 years, it's about 5% give or take. Again, this might be a starting point about 5, and then it might be slightly higher as the years go by. Again, because remember, semiconductors are very cyclical. If this economy start booming, people are actually, buying new products and so on. And then obviously the demand for the products, the fridges and all the stuff that basically these companies make, all the products that these companies make becomes in demand, and then obviously demand and supply, obviously we know what happens. Morningstar is saying it's about 9% discounted right now. $410 is actually where the price should be right now. Is $375 per share. Now there you have it. That's the 5 different companies, and all of them are Sharia compliant companies, so they're not you can pause the video to have a look at this, but all of them, as you can see, basically have a from the business side of things, from interest-bearing and interest-bearing securities, all of them are in a good position. Tractor Supply is the only one that has interest-bearing debt of 17% according to Zoya. But yeah, overall, really great businesses. They are all very diversified companies. And what I would do if I was you and actually looking into this, maybe interested in any of these companies, then go to their company website and go to their 10K reports. Go through every single thing about the business, understand what it does and how it does, understand the competition and so on. Once you've basically understand the business model and how they make money and so on, then you can start looking into other things. Okay, you can look into, for example, analog data. For example, you can see how the revenue is expected to grow in the next couple of years, if the earnings are expected to grow. Okay, if they have been paying dividends, okay, have they actually increased that dividend, so on, the free cash flows, the expected free cash flow going forward and so on. So there's a lot more obviously to research about these businesses, but I'm just kind of giving you an overview of basically what the business does, and then hopefully inshallah you will do your own research, inshallah. Right, I've got other videos that I'm planning to release, inshallah, either today or basically possibly tonight, and then from there onwards I'm gonna do the normal usual video a day, also every other day and whatever. So yeah, stay tuned. If you like this type of things, please just like the videos. It really helps the channel. Okay, subscribe to the channel again. If you have any questions, as always, let me know. If you have not joined us on the Discord yet, please do so, because you actually, for £5 basically a month, you get all of these things, access to all of these things, and the Discord where you can actually share basically your thoughts and what you're doing, and actually with the like-minded people that will not judge anything like that, inshallah. Have a wonderful day. Eid Mubarak. Assalamu Alaikum.